Greetings, people. So in this recording, I will be doing questions on donations tax. Guys, we covered this topic before, so the topic is not new to us. So remember, donations tax is calculated when the wealth or property is transferred from one person to another person. And then we've got specific exemptions and general exemption. Remember, general exemption is limited to 100K, 100,000. That is the value of general exemption. So each individual can enjoy the exemption of 100,000 per annum. And then we know that donations made to a spouse is exempted. So that is part of specific exemption. Donation made in respect of maintenance is exempted. Property received from outside of the republic is also exempted. uh, Donations made to certain organizations such as political parties, universities, uh, are exempted. Donations made to PPOs are exempted. What else? So guys, we know all that, so we covered that in our first session. So guys, let us do this question. So you are okay. Let us first read required. So before we go through the question, let us find out what is it that the question requires us to do. So required, calculate the donations payable in respect of the above mentioned transaction. Ignore the effect of capital gains tax and provide brief reasons when an item has no donation tax consequences. All right, so they want us to calculate donations tax payable. So now let us go through the question. So during the 2022 year of assessment, the following transactions took place. So these are transactions that we're gonna analyze. So number one, 1 March 2021, Chris gave an Apple iPad to his only sister for her birthday. This iPad cost Chris 9.5 but could have been sold on the 1st of March 2021 second hand at 7.5. So Chris gave an Apple iPad, so he donated this iPad to his only sister on her birthday. So the cost of an iPad is, so when Chris purchased the iPad, the cost was 9.5, and then he used the iPad. We know that as you use the assets, it depreciates, it loses the value. So now if Chris were to sell the same iPad that he purchased for 9.5, so he can now sell it for 7.5. So this 7.5 is the market value of the iPad. So the market value of the iPad. So guys, every time when we measure the value of donation, we use the market values. So the market value is 7.5. So the amount that he can recover if he were to sell the iPad, the item. So now, does this transaction constitute donation? So let us prepare our solution. So this is the template that we're gonna use, guys. So we're gonna follow this template. So here we're gonna write the date. So the transaction took place on the 1st of March 2021. So 1st of March 2021. So let me zoom the size of my writing. Okay. And then the donation is made to his sister, only sister. And then, does this donation qualifies for specific exemption? So guys, a donation to siblings is not exempted unless if the question says the donation was part of maintenance. So this was not maintenance, guys. So there is no exemption. So there is no specific exemption. So we're gonna say no. And then the reason, this is not maintenance. So maybe if this was paid in respect of maintaining the sibling, then this is a exempta. The social media on specific exemption, but in this case, there's no specific exemption. So this is not maintenance. So the value of donation, so we always use the market value. So the value of the iPad that he gave, he donated to the sister is 7.5. And then, since this is not exempted under specific exemption, we're gonna exempt it under general exemption. Remember, each individual has or qualifies for 100,000 exemption. So now, because this 7.5 does not exceed the limits of exemption, general exemption, we're gonna exempt it in full. Under specific, we are only exempting under general, not under specific exemption. So now, if we exempt or if we utilize 7.5, the balance of 100,000 will be reduced. So now the remaining balance would be how much? Because now we have utilized on this 100,000, we have utilized 7.5. So the remaining balance available for general exemption is 92,500. So this is the remaining balance because we have utilized the first 7.5 of the 100,000 exemption, annual exemption. So the taxable portion is nil, and then no donations tax. Then next transaction, number 2. Chris owns a flat in Sentin, which he held for investment purposes. On the 3rd of March 2023, he donated his flat to Taylor. So he donated the flat to Taylor. Taylor is his son. So the elder son of Chris is Taylor. So Chris donated the property to Taylor, his son. The flat originally cost 600,000 and its market value was 750,000 on the date of donation. So guys, we always take the market value. So Taylor has a full-time job and is capable of maintaining himself. So guys, this is not a part of maintenance. So it's a donation and it should be taxed. So the date is the 3rd of March 2021. So the donation is made to the first son, Taylor. So does this qualify for specific exemption? No, because this is not maintenance. So we are told that Taylor has full-time job, which means he's capable of maintaining himself. So this is not maintenance. So there is no specific exemption. So reason, not part of maintenance. And then the value of this donation, guys, we always use the market value. So the market value of the donated property is 750,000. Now, guys, remember the balance now that is left for general exemption is 92,500. So now he can only exempt or he can only utilize the remaining balance of 92,500. So the taxable portion here will be, so the 750 is not taxable in full because there's still a balance available for general exemption of 92,500. So now, to get the taxable portion, you're going to take the value of donation minus the balance available, go general exemption of 92,500. So now the difference is, I'm getting 657,500. So this is the taxable portion. So guys, now this exemption has been fully utilized. So now the balance, so we have utilized, remember the balance was 92,500 and we are now utilizing 92,500. So now there is no remaining general exemption balance. So this has been fully utilized. So now we calculate the tax. So you take donations tax, you take the taxable balance multiplied by 20. Remember, donation tax is calculated at 20%, multiplied by 20%. So this is 131,500. Next transaction, number 3. Chris provided engineering advice to Kate to